I'm going to talk internationally to start because I think we have to remember that all the major central banks are facing a common threat, or rather two common threats. The first common threat is a variant on what Larry Summers called secular stagnation, what has many names, but essentially is the low interest rate, low investment, low risk-taking environment that we can't seem to get inflation up. The second common threat is none of us, especially in an institution like this, committed to liberal European ideals and transnationalism, wants to face what happens if the extreme right wing wins. And so these are two threats that I think are central, not just to the existence of the euro, but are motivating and have to be the central concern of all central banks at this time. But of course, the problems we've talked about, or let us say the challenges we've talked about the incomplete monetary union in Europe, make European Central Bank particularly vulnerable. That these threats you not only have to respond to for the good of Europe and the world, but that potentially these are threats that get compounded by the incomplete nature of the monetary union. And so what can we think about that? How should we think about that? And there's essentially two ways of thinking about this. The first is to think about what was on the previous panel, to go forward and say, well, monetary policy can only do so much. We stand at risk of losing credibility and losing popular mandate if we tried to do too much. And therefore, we're going to spend our time pointing out where we think the priorities should be, especially where they touch upon our mandate, so calls for capital market union, banking, further banking union, and so on. And then you can always do that and sign on to every G20 accord that said, starting 8 years ago, monetary policy is carrying too much of the burden, and therefore we need fiscal policy. The second option is to say, well, the extreme version is Mohammed El-Erian's very apt title, only game in town, and to say, sometimes a little too arrogantly, we're the grown-ups in the room, we're able to act, we at least have the presumption we're acting on a non-selfish parochial basis. Let's try to act and sort out the rest later. It probably will not surprise you that I'm in the second camp. But what matters is not what camp I'm in, or even nowadays not what camp Peter is in. It is what camp those of you who are still on the governing council and who will be succeeding Peter, like Philip, are in. And I want to very strongly echo something Mario Monti just said, which is, the Banca d'Italia would sit there and say, we need the following structural reforms, and a week later, somehow those reforms had not happened and the remarks were forgotten, no matter how well argued and no matter how apolitically and persuasively they were put. And I think that looking back at the last 20 years, one needs to go beyond looking in the euro area and saying just, oh, there hasn't been as much endogenous real convergence as we would like, but that the record of the ECB deterring and browbeating other countries into doing reforms is quite poor. And I think some of us warned ahead of time that was likely to be the case, but more importantly, I think you cannot look back at the last 10 years and say, okay, notwithstanding Klaus Regling's valid points about conditionality in the OMT and the ESM, that we have achieved a great deal of structural reform as a result of being tough or being conditional or being political with our monetary policies. And so when we face, and forgive me for the arrogance of saying we, because I view myself as just part of this community, when we face this dual challenge of a very low interest rate, low growth, low inflation world, and the potential for nightmarish political consequences if the system breaks down again, it seems to me that, therefore, there is reason to think much more aggressively about monetary policy in a way that the ECB has not done so far, or at least has not publicly done so far. And so The first point is you have to think about essentially abjuring, withdrawing from the strategic game. Whether we can pick the country of your choice, normally in Southern Europe, I don't know if they're the good countries or not, to use Klaus's term. But, just say the ECB has to decide it's not playing that game. It's going to stick to its knitting. But if it's going to stick to its knitting, it's going to stick to its knitting very aggressively. And so it is disappointing to see in the German press and other parts of the European press in recent weeks, going back to old issues of lender of last resort and of the appropriateness, sorry, just checking the time, of the appropriateness of so-called unconventional monetary policy as a sort of symbolic gesturing to the German public over who's going to get to be the next ECB president. It is very disappointing because this is at best disingenuous and will cause problems later when reality intrudes and you're forced to reverse, or it is at worst a terrible mistake in understanding the role of the central bank and what we know is necessary and what Mario and Peter and Benoit and Vitor and others who served in this council demonstrated in the last 10 years. And so, this isn't about who just gets selected to be president, and that's not appropriate for today, but it is to say that we should not hold back. Someone who does not believe that the lender of last resort is the basic function of a central bank and that should go without saying is someone who should not be leading a major central bank. Full stop. And this is not a matter of personalities or nationalities, it is a matter of economic realism. Now, of course, what this falls up against is the idea that there is a central bank independence problem for the ECB, that the ECB must be careful because it is a supranational institution in a context where European institutions do not seem to be doing that well. I think this is exactly wrong. I echo some of the things Deputy Governor Gulud said. If you look at what the approval ratings for the euro, the approval ratings for Europe in the current context, in part because of the foolishness of my alma mater in the UK, being so visible to everyone, you have a lot of goodwill. Moreover, your independence is not under threat. The ECB went through some silly cycles at the start of the crisis worrying about the capital position of the ECB, which all of us in this room know is a non-issue. We have seen through the ridiculous court cases. We know what we can do. Again, forgive the we, because I think it's about this institution that we're all invested in to help save and lead Europe. And so I think you should go back to something which I said long ago and which I hope you all recognize. The European Central Bank is the only central bank in the world whose institutional independence is preserved by international treaty. You are fundamentally more important and more secure than any other central bank in the world. And you've bravely used that, and you should think about that, using that even more going forward. Be an advocate, don't worry about your independence. So finally, in practical terms, and there are many people, many distinguished scholars and practitioners in this room who can debate with me and others very fruitfully, what are the practical terms to go forward? But I would just suggest two things. First, I know this is going to lead to my losing every future invitation at this bank forever. It's time for the major central banks to come together on raising their inflation targets. And no single central bank can do it, single major central bank can really do it alone. The 2% target, which I co-authored arguments for 20 years ago, has outlived its usefulness. The stickiness of inflation at low levels and the dangers of the zero lower bound and the credibility problems of not achieving such target mean that you need a more aspirational target. I realize this is not an open and shut case, but neither is it something that can be totally ignored at this point. The second point I would make is we're seeing a lot of discussion, quite usefully and rightly, about issues of fiscal monetary coordination. And this is critical, and I agree with my colleague Olivier Blanchard, as well as I'm sure many of you in this room, that the next main step for stabilization in the next crisis will have to come through fiscal policy. But I think there is more that the ECB can do and more that central banks can do in general about pre-committing their ability to purchase certain kinds of assets in larger quantities and how it would be done, rather than waiting for the crisis and seeing how it gets done. I would just conclude by reminding people that everyone gets caught up in, is it unconventional policy and what should you do? But the fact remains that what was called unconventional policy in the US, the Federal Reserve was about by all kinds of good assets as long as they were public and had to abjure all private assets. And in the euro area, it was the mirror image, that the ECB could buy many, many private assets or finance or discount many private assets, but was not allowed to engage in buying too many public assets absent OMT. The reason I point out this mirror image is just to emphasize that there's nothing inherently unconventional. This is all about persuasion in your political context. And it would be good for the ECB to engage in that. That is part of its mandate. Thank you.
Thank you. Adam, I think we chose you to go first on the panel because we thought you'd do a good job of firing the audience up, and I think you certainly lived up to that. I think I lost count of the amount of sacred cows that got slaughtered in that 10 minutes, so well done.
Thank you.